Good evening everyone, Santil here. Can everyone able to see my screen and hear my voice clearly? Hi Bharat, there was 10 minutes delay. Say somewhere I went outside. So just now only I came back. So since there was some delay. So thank you. So let's wait for a few more minutes. Till then, if you have some doubts regarding the yesterday's class, we can discuss. Good evening Aditya. Any doubts regarding yesterday's class we can discuss, or else we can continue with the today's session. So today's session will be option writing or option selling and reading option chain. We'll wait for a few more minutes. Let's everyone join, then we will start the session. So another few members, 4-5 members are regular joinees, attendees. We have to wait for them. So since I told like delay, so we have to maintain the time. So how's the learning as of now? So can you able to utilize this technicals clearly? Is it helpful, or still you have to understand, or it is getting a bit difficult to understand? Where you work? Sir, I am working in Stock Phoenix. There is no doubt. And previously I was working with Axis Bank, Normal Bank Securities, and prior to that India Bulls Securities, and prior to that Axis Bank, and prior to that again two banks, HDFC and Stanchart Bank. So completely into banking and NBFC. You are having a doubt in live market. Live market, you can text Abhilash. He can able to support you. See, live market webinar sessions we tried many times. What happens when we spend our whole time? Maybe everyone comes and joins. That day market will be muted and there will not be any movement. So it is not working exactly in the live market webinar. So as a uh, as a live market support, you can take support in Telegram and live calls you can follow. As a trader, I wish to trade in options more. I wish to trade in options more. Number one. Number two, I want to trade in one lot future with I want to trade one lot future with 2 lakhs capital, positional trade. Okay, so my background is MS counseling and psychotherapy, and UG is into some alternate medicines. So completely working into different field. Say like due to family situations, I was forced to get into work once I completed my studies. So after that, this became our my full-time work, passion, ambition, everything was into stock market. Even after working with stock, even after coming from stock market, I was working in 2 years in bank, but my mind and passion was completely into stock market. I could not able to work peacefully there. Number two, corporate pressure as usual, you know, right? So one is to, if they pay 1 rupee salary, they used to get work for 5 times. So I thought, okay, let's work in the same domain itself, which where we are having interest. So nothing great. So we have to adopt ourselves. That's it. Minting money, yes, there is no doubt. So once you start learning, once you complete the learning, and once you are capable of handling at least one instrument, you can always mint money. There is no doubt in that. So let's start today's session. So option writing. So yesterday whatever we learned, thank you Prashant, helpful, but taking some times to get things. I just want to reach the expert level of what your trainers and have executed the things going forward. Sure sir, we will always support you, no doubt in that. So coming back, so yesterday what we saw is option buying then selling. Let me tell you once again clearly. Yesterday what we saw is option first to buy then sell. Any doubt in this? And both call option and put option, both we will first to buy and then sell. So that means if you are looking for a uptrend, you buy call option for 10 rupees and sell at 12 rupees, it becomes a profit. If you are looking for a call option uptrend if you buy for 10 rupees and if you sell at 9 rupees, it becomes a loss. If you don't close the position and stop loss, that becomes the complete loss. The premium is the 10 rupees will become 0. Same like that, if you are looking for a downtrend, first you buy put option for 10 rupees, and if you sell for 12 rupees, it's a profit, and if you sell for 9 rupees, it's a loss. If you don't close the position at stop loss, the complete premium will be eroded, it becomes 0. So here, what is the maximum risk? Can someone tell here? Say like I bought an option, I forgot, or suddenly I have to travel somewhere, or I missed the stop loss. Okay, let me try what is happening. So here the loss is complete premium. Here the loss is complete premium. So either you have to exit in the stop loss, or the complete premium will become 0. For example, you are buying an option of 10 rupees and with a lot size of 500. So the premium value is 5000. So here you are supposed to exit by minus 1250 loss. You are supposed to exit maximum stop loss at 25%. If you don't exit this complete 5000 rupees, there is a possibility of becoming 0. There is high possibility of becoming 0. So this is the case which we have learned yesterday. Just since we have learned this much time yesterday, so we could able to summarize easily. So now again, option writing. That means we will sell the option first and buy next. So first action is selling, like short selling the stocks. First action is selling, second action is buying. So that means now we should understand something technically. We should understand something technically. From now only all the twist will start coming. From now only the twist in stock market will start coming. If you understood wrongly, or if you didn't understood properly, the trade completely may go wrong. So learn clearly, do 100 times paper trade, then you enter into live trading in all the future coming activities, or else the chances of getting big losses is very high, even if it is a one trade. So coming back, so these activities are being done, this option writing activities are mostly being done by foreign institutional investors, domestic institutional investors. That means, say like domestic institutions like LIC, HDFC Wealth Management, Kotak Wealth Management, and many institutions who are managing the mutual funds. So they are domestic institutional investors. Same like that, we have foreign institutional investors. So they come and write the option. Let's see why and how it is more beneficial than buying an option. Okay. So as I told you, this term is called as option writing. This term is called as option writing. Whoever does this activity, say like my habit is only option writing, then I am as a trader, I am called as option writer. Okay. As a trader, I am called as option writer. So option writing is being done by option writer in the sense, so he is predominantly into option writing trades only. So here selling option first and buying next. This is the first activity. The action comes like this, selling the option first and buying next. Stop loss is 100, it's not 100% mandatory, 1000% stop loss is mandatory. Stop loss is mandatory 1000%. If I put 1000 here, maybe it will create a confusion. So stop loss is not 100% mandatory, 1000% mandatory. If you don't put stop loss, you will face unlimited loss. You will face unlimited loss. I'll explain you how. So short selling in option, you can hold till expiry. Yesterday only I told, if you buy an option, you should hold maximum 3 days or till the Friday. But in short selling options, you can hold till the expiry, because the option depreciation is our profit. The option depreciation is our profit. So this is like a lazy trade. If you are intelligent and if you are lazy, this trade will fit you good. Number one. Number two, it is good for a passive trader. Say like I don't want to trade every day. I want to do 1 or 2 trades in a month. I am happy with 5 to 10% profit. This trading pattern is excellent for you. So let's see one by one. So option writing, let me review again. Option writing, selling the option first and buying next. Stop loss is mandatory. Short selling of option, the action is called as short selling of option. Like how do we short sell in future, short sell in cash? Same like that, short selling in options. You can hold it till expiry. You can hold it till expiry. Till the last Thursday you can hold. Next, full span margin is required. So previously in the previous naked options, what is required to buy the naked options or vanilla options or open options? Which term is required? Premium. Perfect. Here we require full span margin. For example, if you are expecting sell Reliance 1480 call at 12 rupees. Okay. Sell Reliance 1480 call at 12 rupees. For this you require 1,50,000. For this, it is not 12 into 500. No, it is not like that. Whether the premium is 12 rupees or 25 rupees or 100 rupees, you require the full span margin. You require the full span margin to short one lot of option. That is option writing. You require full span margin. Any doubt till here? Any doubt? Like future cost, perfectly right. It's like future cost. For short selling option, you require complete future span margin. Okay, so next, option writing. So let me explain you one more time why we require complete span margin. Okay, why we require complete span margin. For example, I am expecting a trend. I am expecting a trend. So listen this carefully. If someone didn't understand or if you understand little bit only, so this example will make you little more clear. Say for example, I am expecting uptrend in Reliance. So now, can you use bracket and cover order for option selling? I don't think so, sir. I don't think so. You can check with the exchange. So sorry, you can check with the broker. Okay, so let's learn this completely first, then ask your question later. Coming back, for example, uptrend in Reliance. So what all can be done? So we can buy in cash market, buy in future market, future lot, buy one lot, call option. Is all this thing right? If we are expecting an uptrend in Reliance, can we do any of these things as per our capital? So now we can do one more thing also. So now everyone knows this will go up, this will go up, this will go up. If call option is going up, so forget about everything else. Forget about everything else. Assume that this call option from 10 rupees, if it is going up to 20 rupees, then what will happen to put option? Will it go up or will it go down? If Reliance is going upside, it will lose the premium. It will lose the premium. So for example, if you sell the premium at 10 rupees, when this goes to 20 rupees, this will come to 2 rupees. So now what is the profit I am getting? 8 rupees. Perfect. For this, how much capital is required? 1.5 lakhs capital is required. 1.5 lakhs, approximately full margin. Approximately full margin. Uh, some future is asking for only 50,000, 60,000 or 80,000. Some future is asking for 3 lakh rupees. So full margin is required. So now we are clear, right? The trend we are clear. Why we are selling options. Now let's understand why should we do this trade. Why should we do this trade? The same place you can sell put option. So this also can be done. So if you are expecting an uptrend in Reliance, you can buy in cash, you can buy in future, You can buy one lot of call option. You can sell one lot of put option. So which one is safe? It depends. It depends. So let's explain. Let's learn one by one. Okay, so let's learn one by one. In the put, profit will be limited to the premium received. Correct, sir. Bajaj sir, that's right. Can option writing can be carry forward? Yes, you can carry forward, sir. That is what I told you. You can carry forward till expiry. Say like for example, this month option if you are selling, you can carry forward till this month expiry. Rollover is not possible. So coming back here, let's understand the trend. Let's understand the trend crystal clear. Option writing. If you sell a call option, that means you are selling a call option. If you sell a call option, that means the trend is bearish. So you are expecting the stock to go down. The stock to go down. So usual trade is buy put option, and action is short selling. Action in cash and future is short selling. So that is what we discussed here. Same thing. It's in a formulated way. If you are selling a put option, the trend is bullish. So if you are selling a put option, the trend is bullish. Buy a call option. Usual trade is buy a call option, and action in cash and future is long or buying. So are we clear till here? The same thing I have put in a different way. So let's see how it is profitable. So let's understand that. How it is profitable, let's understand that. As I told you, this trade setup is for someone who don't wants to trade, who don't wants to do many trading, number one. Number two, I don't have time to trade, but still I want to make some money in stock market. Number three, who wants some limited profit, say like 5 to 10% is sufficient for me. Number four, good capital. Because for writing one option itself, you require 1.5 lakhs to 1 lakh rupees. So you should have good capital. So say like for example, we have seen many of our students even having capital of 30 lakhs, 40 lakhs, and they are utilizing only 2 lakhs, 3 lakhs for their trading. So how much money is left out in their account? 20 lakhs, 30 lakhs is left out. So if they can able to do one data calculation at the beginning of month, and if they could execute these option trades in their accounts, out of 40 lakhs, if you get 5% profit, do you think this is a big money without taking multiple risk? Yes or no? Say like 10 lakhs. You can trade 10 lots. You can trade easily. You can trade 10 lots option. So from here, if you are going to make even 50,000 rupees per month, you are doubling your capital at the end of the year. Sir, nobody will give this. What is the FD rate? 6%, sir. For 8%, we have to search bank. For 8%, we have to search the bank. So approximate is 6 to 7% in our exclusive, in our day-to-day usual banks. It is only 6 to 7% is the FD rate per annum. Here you can make 5 to 8% per month easily. So now always do short. How to do this short selling? Always do short selling in out of the money 3 to 5 strikes later. 3 to 5 strikes. So yesterday what I told, which strike we have to buy, I told. So immediate strike or 1 and 2. 1 and 2. Immediate strike or 1 and 2. Shankar sir, I told out of the money is perfect. You buy ATM. If you are buying a naked option, you buy ATM or first strike or second strike. Maximum third strike. If you are trading on the first week of expiry, there is little limitations what we should not do. If you are trading in the first week of expiry, then we have to take third strike only. but still that time you can avoid trading. Okay, so coming back, always do short selling in out of the money, 3 to 5 strikes preferred. For example, current market price is 1500. So from here, reaching 1600 or reaching 1400 without a big news, reaching this level is very difficult. Maybe even say like how say like for example, when the current market price is at 1500, I am selling 1600 call at 20 rupees. Again I am selling 1400 put as 20 rupees. So what happens during this month? The stocks goes up, the premium will go up. Again when the stock comes down, premium will come down, and the stock goes up, premiums will go up. So when it closes around this level, this premium will become zero. If the stock is straight away crossing this limit, crossing 1600, then we will face loss. How do we face loss here? If you are straight away, if you are selling put, if you are selling 1400 put, if the stock is straight away falling down and crosses 1400 at the time of expiry, you face loss here. So first thing is, you should not take an active stock. You should take inactive stock. You should take an inactive stock. You should not take a trending stock. Like this stock, we should not take for option writing. Are we clear? We should take a stock which is having sideways movement. So this is correct. Always do selling in out of money, 3 to 5 strikes is preferred. Choose the stock which is having low volatility, no trend. That is very important, which is called a sideways stock. Of 1000 lot contract is written, can we able to buy 1000? Simon, I didn't get you. If 1000 lots contract call is written, then can we able to buy CE 1000 lots, not more than that? It's it so. No, Simon, I didn't get you. So we are making an example with 1600. Why you are taking 1000? Stock will not become zero. It will, at the end of the month, it will come and become 0.05. 0.005. 100% there will be buyer. Yeah, there is no doubt. 100% there will be buyer. In very rarely it becomes zero. It will not become zero. 100% there will be buyer. Don't worry about that. Okay. So coming back. So first action is selling the call option. Second action is cover or closing. So now the points. Option writing requires full span margin amount. Option writing requires full span margin amount. Next, option writing has to be covered up at the end of the expiry, or else penalty will be applicable. So whatever now Bhaskar asked, so if you are not covering the option, there will be penalty. So we should cover the option 100% at the end of the expiry. No need to wait till the end of the expiry. Say like for example, you are short selling on 2nd of the month. Okay, even 15th you are seeing good profit. You can close that position on 15th itself. No need to wait till the end of the expiry. This trade can be initiated even the first day of the contract. This trade can be initiated even the first day. So when is first day of the contract for next month? Can someone tell? For December, when is first day of the contract? 29th. Perfect. So Thursday, the contract is tomorrow. The contract is getting expired. The day after tomorrow, contract is starting. Okay. So weekend holidays is a favorable. Weekend and holidays is favorable. Yesterday I told don't hold the positions on weekend or in public holidays. But here weekend and holidays is favorable because premium will decay. You can hold till expiry if you are in profit. Next, you can add one more point. Stop loss is mandatory. Stop loss is mandatory. So this is very important point. Okay. Say for example, this is something else. what will be here? Say for example, if you are having 1 lakh rupees, you can expect a profit in between 5 to 10k, or you can do two trades in a month, one or two trades in a month. If you are having 10 lakh rupees as a capital, you can make 50 to 100k. You can able to make 10 to 12 trades in a month. So let me show you an example. Okay, so coming back, what I am supposed to do, I want to show you the live trade. Okay, so now coming back to some stocks. Oh, LT crashed. So we were discussing here, right? No need to take any positions here since it is in between the congestions. You can see here it is not allowing the stock to go upside. So there is a huge crash. Okay. So now let's take some stock like Coal India, which is on a sideways momentum. Okay, let's take this Coal India on 1st November. Long build up seen in LT today. Long build up will not be possible. Let's review that later. Okay, let's review this a bit later. So coming back, so uh, now you can see here, 1st November, no, power grid option liquidity will not be there, sir. Option liquidity is also important because if you buy, you require some sellers, right? So let's take this, say like 207, November 1st, it was 207. Say like for example, I'm writing 220 call. Let's see the So it's like fourth strike. Let me take even 225 call. Okay. So let's see what was the price on November 1st. November 1st, you can see here it was 3 rupee 80 paisa. Nifty, no, definitely not Nifty. Nifty will have a huge fluctuation. So don't take Nifty. You can see here 31st 1st November, you can see it was 3 rupees 60 paisa. Okay, 3 rupees 60 paisa. After that it went up to 7 rupees. So this place our stop loss might have been hit. I don't know why. 1st November, okay, so that was the wrong time. So after that there was a complete momentum. So you can see this is called as momentum. So complete momentum, the stock has performed completely. For example, let's take that at this place we are taking 220 call, this place we are taking 225 call. So this place 225 call was any percentage of stop loss you can keep same 25%. You can see here 5 rupee 89 paisa, 5 rupee 89 paisa, you are selling 225 call. 225 call you are selling at 5 rupee 89 paisa. No, when it was here you should be taking 230 call. Okay, 230 call. So 230 call you are selling at 4 rupee 50 paisa. Maybe we can take it here as 4 rupees. So when you sell at 4 rupees, you can see this. After that, completely it's a crash. It's a crash. I'll explain you, Bhaskar. After that, completely it's a crash. So what is the profit? 2200 into 4. So that is 8,800 rupees profit in single trade. 8,000 rupees, 8,800 rupees profit in single trade. Clear. So now how to take the positions here? How to take the positions here? Just a minute. Clear. So for this, how much capital is required? You have to refer the span margin. For this, you have to refer the span margin for the capital requirement. So Coal India, what is the span margin? Let me check. How did I select 230? Okay, so let me tell you how did I selected 230. See, select just I selected why I selected 230 because the stock is completely up in the last 2-3 days. Okay, and from here I have taken 3-4 strikes later. 216 from here 220, 225, 230. I have taken three strikes later from that place. Even we can take 235 call. So how do we select the stock for this option writing is again the trade setup. Again the trade setup. So can someone tell me any stocks which is in trade from top as of now? Any stock which is in trade from top as of now? Okay, just a minute. So Adani, Tata, IGL. So you can see here. So now there is no guarantee that the stock will go will reverse from here. So because there is no candlestick pattern. So Tata, there is 100 Tata, sir. You should tell what is Tata. Tata Motors is not coming. IGL no. HDFC. Yeah, we can take this, but again it's a risky one only. Again it's a risky one only. You have to put a stop loss. You have to put a stop loss. Let's close with this. This is a good example, but stop loss is mandatory. Anyhow, stop loss is mandatory. So now you can see market is at 2336. Okay, 2336. So let's see the HDFC denomination. So now we are in the end of the contract. Should I take near month, this month call or next month call? Should I write this month call? Yeah, next month call is better. Okay. So I'm going to write call option because I'm expecting a downtrend. I'm expecting a downtrend. So I'm going to write call option. I'm expecting a downtrend. So I have to write a call option. Okay. So which call should I prefer now? So the denomination is 20. So 2336, shall I take 2420 call? Will it be right? Will it be right? 2430 call. Shubham, now premium will be, if I take this month 2430 call. Sorry, 2420 call. 50 paisa. Are you sufficient with 50 paisa profit? For 50 paisa, that is for 125 rupees, will you take a risk of 1.5 lakh rupees? Right? So I'm taking a risk. I'm going to sell 2420 call option and I'll keep a stop loss technically here at this level. If the stock is breaching 2370, I'll exit the trade. I'll exit the trade 2370, 2370 somewhere around, because if the stock if the stock even goes here and again reverse back, I'll get this complete 26 rupees as a profit. So now what is the profit? 26 into 250, 6,500 rupees I'll get as a profit for the investment of 6,500 rupees I'll get as a profit as for the investment of HDFC. My investment is 1 lakh, say like 1,10,000 rupees. Let's take MTM, that buffer also. Let's take 1,15,000 rupees or 1,20,000 rupees as a capital. Let's take 1,20,000 rupees as a capital. I'll get complete 6,500 rupees as a profit. Number two, take Coal India. 77,000 rupees. I am making, let's take 1 lakh rupees as a capital including buffer. You are getting 8,000 rupees as a profit. So, do you think this is a good deal? Passive, one trade in a month. You put a price alert at 2360, and once this level is getting triggered, you should start watching this option, this stock, whether it is going to give profit or loss. Clear? So, any doubts? So you said sideways market. We can pick sideways the stock which is in sideways market. That is trade. That is picking the stock without any strategy. Okay, that is picking the stock without any strategy. So we know there are four strong trade setups. Why don't we trade here? So this is called as double top. Is that right? Is this double top? Number one. Again, I'm telling don't trade here. If you get a doji and if you see a reversal, then go and sell the put option. Sorry, call option. Again, I'm telling you follow only trade setup. Don't do the trades blindly. Span margin plus little buffer, not exposure margin. You written, see, Simon is asking you, I have written one call option at 30 rupees and it went to 3 rupees. No buyer is there. I'm not sure, sir. Buyer should be 100%. There should be a buyer, sir. There is no doubt in that. There is no doubt in that. There should be 100% buyers. Maybe 3 rupees. There will not be any buyers. There can be a buyers for 6 rupees, 7 rupees. At that time, you have to compromise on your profits. That's all. 100% there will be buyers. No doubt in that. Maybe sellers will not be there, but buyers will be there. 100% buyers will be there. So are we clear about option writing? So this is, say like for example, if you are having good capital, you can make good profits. There is no doubt. And peaceful trades. So for 26 HDFC 2420 call, span margin is 50,000. So I need 50,000. No, sir, you require full span margin. For a positional trade, you require full span margin. See here. See the last one. See the last one. See here. You require this as a span margin. You are going to carry forward the position, right? Total margin. So this required is, you require this full amount to carry forward the position. Clear? So next is, let me check. Did I left anything? Okay. So when time what to trade? Yesterday, I think we have left this. Did we learn this? No, I think we left this. Okay, so we missed it. It's not left out. We missed. So when to trade, how much to trade, when to trade. So when you say, like for example, when the contract is starting tomorrow, and if you are going to be a buying in option, if you are going to looking for a buy in option, then don't trade for the first week. First week is the wrong time to trade in stock options and Nifty options also. I can say Nifty option, weekly option, there is no different. You can trade in Nifty weekly options. And when you trade in stock options, first week is not the right time to trade in stock options because the premium will be very high. It will be depreciating very soon. Next, even if you want to trade, you can trade in second or third strike, you can trade. So how much should be the premium size? Can someone tell? What should be the premium value approximately for stock option? 8 to 12,000 rupees. Perfect. It should not exceed more than 8 to 12,000 rupees. So second, two to three trades you can do in the second week. You can do in OTM second strike. Next, 3 to 4 trades you can do in third week. You can do in ATM first strike you can do. Fourth week you can do 5 trades. If you are expert in option, you can do 5 trades in fourth week, ATM and ITM. So Aditya, one example for option trade, one more time. If expecting a bullish in stock, as per our trade setup, how will you bind? How will you buy for option? You should sell option, right? Why we are looking for buying an option? Now we learned option writing, right? So we will be looking for us. If you are bullish in stock, you have to sell the put option. You have to sell the put option. So one more thing is there. Okay, which amount to buy? See, every time it will not be like every time it will not be the premium will be same value. Premium will depreciate. Since the premium is depreciating, okay, since the premium is depreciating, so week 1 you can buy premium in between 8 to 12k. Week 2 you can buy 8 to 12k. Week 1 10 to 12k. Week 2 8 to 12k. Week 3 the premium will be drastically, it will be coming down. Even first strike or second strike will cost you only 6 to 8k and 4 to 8k. This is very rare. We get 5 weeks. In that week you can invest only 5,000 rupees. So even if you are buying, even if you are buying and selling in 5,000 rupees, you should have that proposed amount to be in your account. The reserve amount should be there. There is no doubt in that. If you do intraday options, still whether we should avoid first week. Yes, absolutely. Premium value will be very high. Whether option market does not know, right? Are you doing an intraday trading or positional trading? If the stock is moving up like this, the option will move like this. Very slowly it will start move. So I think this is complete. Any questions you can ask? So I usually see messages in channel saying huge call rating happening. That we will see, ma'am. We will see. That is the next topic. Can I cover my sell option without fail? Will bias be there? 100% there will be bias, ma'am. No doubt in that. Very rare cases will happen. At that time we have to give in some loss. It's not loss in the profit. You have to take some loss. So yesterday you told to remind how to calculate premium with stock movement. I'll do that now. Every stock premium becomes zero. Not every stock premium will become zero. No, it will not become zero. So this is a valid question. This is a valid question. Current market price of Reliance is 1500. Will 14 1480, this option will become 0. 1480 call. Why? Because it is true, right? It is true. This is the current market price. It's not nearby, it's inside. Its current market price is 1500 and ideally it's 20 rupees in profit. So this is ITM. ITM and ITM options will never become loss, will never become zero. Yes, correct, ma'am. ITM option will never become zero. Yesterday class, if itself is not clear, Asian Paint 1724, in that case, how to buy an option call. Yesterday class itself not clear. Asian Paint 1724. Okay. It's very simple. See, every time you will not get nearby numbers, right? Asian Paint 1718. Now buy Asian Paint 1720 call. Or you can buy 1700 call. 1724. When you tell about 1724, you can buy 1720 call and 1740 call. 1700 is not required. Today Asian Paint current market, it's 1718. Okay. So you are telling about cash. Let me come. 1715. So which is the nearest strike price now? You tell me. Rare case, no, Bank Nifty, in that case, the Bank Nifty premium will be just marginally, it might have crossed. Aditya, you should tell me. If 1715 is the current market price, which strike I should pick? Tomorrow is the expiry. You tell me which strike I should pick for a call option. See, Rahul, 1700 is not required necessarily. Necessarily 1700 is not required. If you expect it will reach, see, now it's all about assuming the target. Now it's all about assuming the target. If you expect from 1715 it will reach 1725, you can buy 1720 call. If you expect to reach 1750, then you can buy 1740 call. It's all about where do you predict this price will reach. Instead of stop loss, can I buy stock option? Sir, I didn't get you. Instead of stop loss, can I buy stock option? Instead of cash market, you can buy stock option. Instead of cash future, you can buy stock option. Clear? See, option, I'll tell you, complete batch members has to work as a team. You should select the stock, you should select the strike price, and you should work as a team. Someone should reject the stock or the option due to the liquidity spread, whatever it may be. Then you can start being a very strong option team in Stock Phoenix, and by yourself also. Okay, initially you try to help each other. So now I think this is covered, completely covered. So let's get into the next subject, which is called as option writing. Option writing. Okay. So we are entering into the next subject, which is called as option writing. So for option chain reading, option writing we learned. So now we are entering into the subject option chain reading. So option chain reading helps you to understand. So what is the use of option chain reading? By reading the option chain, you can understand the support 1 and supports 2 of a stock or index, or you can understand the resistance 1 and resistance 2. So what does pivot give, sir? You tell me, what does pivot give? What is the inference of pivot? Can someone tell? Pivot, one black line we have learned, right? So resistance and support. This is pivot line. Above that, resistance 1, resistance 2. And here again support 1, support 2. So, but pivot is based on the simple chart calculation, right? See, pivot is based on the simple chart calculation. Yesterday's high plus low plus close by 3. That becomes a pivot line. From there, the support and resistance happen. Yes, that is a strong factor. But this support and resistance is being, we are arriving this support and resistance from data. How we read open interest. So same open interest in option data, we are reading the option open interest data in option, and from this we can able to arrive support 1 and support 2, resistance 1 and resistance 2, and also we can arrive target and stop loss. So with this itself you can trade in Nifty. Clear? And how to say that? So open interest in future, what we can able to understand? One strong term I told you. Open interest in future. Saying the open interest in future, one perfect term I told you. Perfect. It's a momentum. Momentum in the sense the force. Yes, the force. So in this open interest on options, we can able to understand. We can able to understand where to make an entry, or where we can able to easily predict that this stock will not go above this level. That we can easily predict. Okay, so now coming back, so how to see the option chain? So what you have to type is NSE option chain. So click on this NSE option chain. So now at the last week the data will be not very clear, but still we will see. Okay, but still we will see. Since tomorrow is the expiry, there will be a the traders will close the position here and they'll start buying in the next week option. Okay, but now let's see here. So you can see here, by in this place you can search Nifty and Bank Nifty. Generally we don't see for Bank Nifty, we see for Nifty. Or if you want to search for any stock, just type the stock name and give go. That stock options data will come. Okay, option chain data will come. So now we don't require these things. We are going to see only for Nifty. Okay, so I'll tell you what is important in this place. What is important in this place? Nifty. Okay, this date is very important. So you can see there are multiple dates will be there. You take either current month, current week option date or month and date. So do we have two option date for this month? For this month, for November, we are left out with only one option date, right? So say like for example, Friday, if you are going to see, you can either see 5th December data or 26th December data. Don't see in between. If 10th, if you are seeing the data, see either 12th December or 26th December. Don't see 19th December. Are we clear? Either see the nearest option, nearest week option chain, or see the month end option chain. Don't see in between. So that will give you wrong option. So now we are going for this. So we have seen what is to be noted here. Number 1, number 2. These are the two things to be noted. So this, once this is clear, we will go back to the data. Scroll the data and go to this place. Go to this place. Okay. So now I'll take a paint and I'll make you understand. So I'm going to paste this here. So probably I think everyone can able to see the screen, right? So here the important thing is what is to be noted. What is to be noted here is, just a minute. See, we don't want to read the data in the gray area, gray or yellow area. We tell this as a gray area. Okay, we don't want the data in the gray area. The first point of rejection. The first point of rejection. This data we don't want. We want the data which is listed in white. Number one. Number two, left side call option, right side put option. Left side call option, right side put option. Okay. Number two. Number three, this is the center point. This is the center point. So from here, we will read the data for call option here, and we will read the data for put option here. So what data we have to see? There are many datas, right? We have to see open interest first. The first we have to read the open interest. After that, we have to see change in open interest. This is again like a supporting factor. Open interest is the actual data we require to understand. Change in open interest is additional factor, just to confirm that. Okay. So now, how to read this? How to read this data? Let me tell you. From here, to understand the call option data, first three boxes will be in one set. Okay, first three boxes will be in one set. Next three boxes will be in one set. Only one time this activity. From next time and all, you can just by seeing the data, you can start understanding. Okay. First three boxes in one set, next three boxes in one set. Same like that for put option data, first three boxes in one set and next three boxes in one set. Any doubt till here? No doubts? So it's a very simple thing, right? We have taken a print screen, we have marked the center point, and after that we have taken first three box, second three box, first three box, second three box. So now, which is the big number in this place? Which is the big number in this place? Okay, in this place, which is the big number? Can we take this? 248, 2486, 700. This is the big number. Next big number is 153525. This is the big number. Same like that. In this place, if I see 450, this is the big number, and this is the big number. Any doubt in this till here? Clear, right? So coming back, this is called as resistance 1, resistance 2. So which is the one? 12,200 is resistance 1, 12,300 is resistance 2. Support 1, support 2. That is 12,000 is support 1 and 11,900 is support 2. So let's mark that in Excel. Let's mark that in Excel. Current market price of Nifty is 12,100. 12,100 exactly. So what is the resistance we have seen? 12,200, 12,300. Support what we have seen. Am I audible? Am I audible? Yes, thank you. Because there was no questions. Okay. So this is how we are analyzing the data with, we are analyzing the market with data. Okay. So this is actual data. So the time to take data is EOD. EOD. So in open interest data in future, when we have to take, in open interest data in future, when we have to take live data. So can you able to understand, there is time, everything is very peculiar. When we see about stock market, everything is peculiar. So when we do all these things only, we can be we can get through 70-80% or 90% accuracy levels. Say like for example, if you can able to make 70% or 90% accuracy level, what you are going to get is, anyone is going to give you a big certificate, or anyone is going to give you any appreciation or awards. What you are going to get? Profit. So what is profit? Money. So that is the reason this much fine tuning is very important. Okay, if we need 2000 rupees note, we need only 2000 rupees note. We don't need replica of 2000 rupees note. That becomes a fake note, right? Even if in a small corner, if it is stared, we don't take that note. Anyway, we can give it in bank and exchange, but it's additional work. So same like that, don't compromise in technicals. Even if you are trading only one time in a week, please be convinced with the technical, convinced with the trade setup. And very important is follow stop loss. So this is the data which we have taken through options. You can also take in live market, but preferred is, do you think you will be having this much time to see in live market? Live market, it will be keep on changing. Live market, it will be keep on changing. And how to say, now you can have a trading plan. Now you can create a trading plan now. So tomorrow market, if the market is opening flat, so now let me put like 12,100. Second box call side was high. Let me check, sir. No, you can see that is what only I have taken. Are we right? Okay, I missed one more thing. You can see here, first one we have seen open interest. First one we have seen the open interest. Second one is change in open interest. So change in open interest, what it shows, this data becomes very strong. So when there is a positive figures in change in open interest, that means this data is being added to this today. Again, you can see here, I think it's a negative in open interest. So this is little bit weak. This area is little bit weak. This resistance one is very strong. Same like that, you can see here, they are unwinding the positions here. So if someone is closing the position, then what does it mean? This area is weak. This area is weak. So now resistance one is very strong. So that is what we have to summarize. So now coming back and see the big numbers. See the big numbers. So which is big number here? This is the big number, or this is the big number? 4.506525. Here 2.486700. So this becomes a big number. So the important zone is S1 and R2. The important zone is S1 and R2. Sorry, S1 and R1. So important. So now simply what you can do is, with this what you can do is, from 12,000, if big number is in second box, Aditya, I didn't understand. If big number is in second box, you take the big number. If big number is here, take this as a big number. That's what I'm telling. Out of these three, which is the big number, take that. Out of these three, which is the big number, take only that. Ignore the other two datas. Okay, so coming back, so trading plan. Now how to trade? 12,000 is the current market price. That is closed market. 12,200 becoming a strong resistance, 12,000 becoming a strong support. Sorry, 12,000 is the current market price, 12,100. So now if tomorrow market goes above this, you can make your long with a stop loss of 30 points, because we know that it will reach till 12,200. So this is number one. Number two, if trading number one, if Nifty is crossing above 12,100, you can buy Nifty with 30 point stop loss, okay, and wait for a target of 12,200. Trade setup number one. Number two, if there is a gap up here, if there is a gap up here, and after that it is moving, can we buy here? From 12,100, gap up is 12,150. So we should not buy. We should not buy. So don't buy. Wait till it goes and take a resistance, and if it is reversing, go for a short with the stop loss of 30 points. So your immediate target will be 12,100. This is the 30 points is a approximate, sir. 20-30 points will be approximate. We can't take 100 points as a stop loss, right? So taking 30 points as a stop loss, 30 or 35 points based on the pivot resistance. You can see the chart and you can arrive. Next, market is opening at 12,100. This is the current market price. If it is opening at this place and if it is crashing down, you can go for a short with a stop loss of 30 points. So now I will not tell 30 points with a stop loss. I will tell just as a stop loss. So if it is opening in between 12,050 and if it is going down, don't buy or don't sell. Wait till it reaches 12,000. So once it comes here, again if it is going down, should we buy here? Basically now we should be knowing what is support and resistance. It is going down. Should we buy here? Answers. Come on, yaar, let our artificial intelligence work. No, don't buy. Sir, it is going down. Sir, it is okay. Let me draw it clearly. We should not buy, we should not sell. Both we should not do. Okay, let me draw it clearly. 12,100. Okay, market is opening at 12,050. And it is going, it is broken 12,000 and it is going down till 11,985. So do you want to buy here or sell here? No trade, because already from this level market is down by 75-80 points. So don't buy. Next, where is our support level? 11,900. After reaching this level, if it is reversing, you buy. If it is not reversing, don't buy. No, there is no buy. Clear? We should execute our trades either in this level or in this level or in this level or in this level or in this level. If you enter here, this becomes your first target, second target. Ideally for intraday, it's only one target. If you enter here in short, you will be taking 12,200 as a target. Always remember, resistance will be a shorting point. Resistance 1 also will be a shorting point. Support will be a buying point. Support 2 will be a buying point. Any doubts? Don't buy here. Don't buy here. Don't sell here. It's like middle of the curve, top of the curve and bottom of the curve. Don't go on short here. Already the Nifty is came down. Same like that, this is applicable for, it is applicable for stocks also. If it is reversing at 11,985, say like for example, stock is reversing from here, it came down. If it is reversing at 11,985, and what will become here? Now this 12,000, what will happen here? Perfect. Others, perfect. Resistance. Bajaj, it's perfect. So after crossing 12,000, you can buy. So moving average acts as a support, moving average acts as a resistance. RSI acts as a support, RSI acts as a resistance. So all the line which is acting as a support, after a breakdown, the same line will act as a resistance. Are we clear? Perfect. Thanks a lot. So this is how to identify the trades along with the option chain reading. So call writing means, the definition is, let me see if anything is left out here. Option chain should be read between 2 to 4 series for stock and 3 to 5 series for index. We can take it like 3 to 6 series. For stock option, no need to take 3 boxes, take only 2 boxes. How to check max pain? 100% I don't know what is that, sir. How much money required in Bank Nifty selling? Bank Nifty future selling approximately 1 lot. So this option data treated as a resistance and support means tomorrow 15 minutes pivot point will have same level. I'm not sure. Let's not get into 15 minutes again. Can you show one example for stock option? Yes, I'll show. I'll show. So now series means this is called a series. This is called a series. 3 series, 3 series, 3 series, 3 series. For stock option, take only 2 series. Take only 2 series. Clear? So next, option chain should be read between. Okay, this we have learned. Okay, mark current market price, mark R1, R2, S1, S2. Check with the side data is strong. When it reaches the stronger side, we can make an entry with minimal stop loss. Yeah, we will check. So now let's understand the technical term call writing. Call writing means selling of call option. So now just now someone asked, right, what is the, I can see huge call writers happening in so this kind of things when it comes in channel, you should remember this. Call writing means selling of call option, first action, the trend is down. Next, call unwinding means closing the option which is written. So closing the position which is trend is up, or we can tell like the trend is over. Put writing means selling of put option, it's a fresh action, trend is up. Next, put unwinding means covering up the put option, so the trend is down, or we can tell like the trend is over. So very simple. You should keep this for some days to understand completely. And let me take one example for uh, let's see HDFC. Apart from option chain as R1 R2, we have to, if you have trade setup as R1 R2, how to consider? You can combine both. Apart from option chain, if you have a trade setup, you can combine both also, no doubt in that. HDFC Bank. Okay, so now I am not going to mark that box and all. Okay, call option, put option, center point. Okay, center point, first two, second two. First two series, second two series. Hold your questions, hold your questions. December series we are not supposed to see now, Mayur. Why do you want to see December series now? It will not work. They will migrate only by first day of the contract. If you see December series, it will not work now. So now if you see the data out of these two, this is resistance 1, resistance 2. That is 1260 is, sorry, 1260 is becoming a support, 1250 is becoming a support 1, support 2. Okay. Next is coming back here, resistance 1, resistance 2. Simple. That's all. So now HDFC Bank, if it is reaching 1300 and if it is reversing, very important, underline the word, if it is reversing, go with a short, go for a short with 6 to 8 point stop loss. 6 to 8 point stop loss. And if it is coming to 1250 or 1260 and reversing, again you can buy with a stop loss of 6 to 8 points. And if it is opening flat and moving towards any direction, you can buy or sell again with 6 to 8 points as a stop loss. That is half percentage. This is called as blind trade. Am I right or not? Do you have any chart behind this? No. So ideally what you have to do is, you should, you should select the chart. Again coming back to the first only, again back to square one. Select the stock from the chart. Yes, 6 to 8 points in cash. Select the stock from the technical past stock, and after that do this all the research. Okay, select the stock from the stocks which is technical past, and after that do all the research. See here, now coming to the data. Now coming to the data, these things we have seen. This is fresh data. Technicals, open interest in future of option chain. I'm repeating again. Now we have read, we have studied cash market, we have studied future open interest data, we have studied option open interest data, option reading. So how to correlate everything? So there is a checklist box here. There is a checklist box here. You can see here, you can see if all the three lies on same direction, then the chances of your chances of your trade going wrong is very low. So first one is technical. First one is technical. Okay, if technically, if the technical cash market study get confirmed, if the chart is bullish and inference, okay, chart is bullish, and if the chart is bullish, next future data is also bullish, open interest is, let me tell you how to trade, how to read. We have to read from top to bottom. Sometimes I also used to get confused. I used to read like this. That is wrong. You should see like this. That is, for every derivative stock we can see all this thing, all this thing. Okay, so you can see here, if technical data, technical cash market, it is giving bullish, future market it is bullish, and option market if it is bullish, we can still trade. Okay, we can still trade option. It's a negligible data, we can trade. Next, if technical is giving bearish and option, that is, sorry, future data is bullish and option is bullish, no trade, because cash market is the primary thing, so we don't trade. Next, bullish, bearish, bullish, no trade. Again here, so that is here, just a minute, already it's mentioned there. Inference, all three bullish long, all three bearish short. Clear? First column shows bearish for option market. Yes, we can trade. That is what I told. This is negligible condition. Option is negligible condition. For example, this will come here. Here it will come bearish. Okay. Bearish, bearish, bullish, no trade. Bullish, bearish, bullish, trade. So no trade. So it is mentioned here. So this small thing I am telling you again. Maybe if you are an expert, you can understand immediately, or else it will take some time, because it's like how we started learning even now I don't know what is 15 into 27. I don't know. It does not runs in mind. We have to calculate slowly, or I have to go for a calci or Excel sheet. So like this, it will take some time. Okay, it will take some time. So once you are clear about all this concept, your trading will be very peaceful. There are many examples. Okay, you may be seeing in the previous batches. So it's like they are somewhere following at least one strategy and they are sticking properly. So that is the one thing we have to maintain our consistency. That is very important. See, now we have seen 4 trade setups, and from tomorrow we are going to see few more strategies like HSE. Maybe everyone will be knowing HSE, but still it's a part of curriculum. I'll be taking you through HSE. Double moving average, it's a very important subject. And so when we teach you all this curriculum, at least you should practice and you should be strong in one sector. Okay, so which time frame chart to see for option selling? For madam, there is no time frame chart, madam. Option selling, you can see a daily time frame, no doubt. Option selling, you can see daily time frame. Okay. So could you please, so how exactly where to check open interest on NSE site? Sir, just Google NSE open interest. That's all. You'll get the first link like this. It's not so complicated. Google NSE open interest. That's all. NSE option chain. You are telling about open interest. Open interest, you have to check into the Google sheet, our webinar sheet. I have updated all the things for stocks also. Yes. Okay. So let's see tomorrow for how to check option market bearish or bullish. Sir, just now we learned, no sir, option market which side it is strong. That is what we have seen, right? See now which side the data is very high. So this side the data is high, 4.506.525, 2.406. That means support is very strong, resistance is weak. Resistance is weak. How to identify huge call rating happening? Whenever you see 4 times, 5 times of the number in this series, that is called as huge call rating. Either here or here. Call rating or put rating. Clear? How much money required for Bank Nifty selling? Sir, you can check in the span margin file. It depends. It changes on everyday basis. Please show that sheet for tables above. Sheet, just a minute. This sheet. I'll upload this sheet, ma'am. In 10 minutes, I'll upload the sheet. Okay. So thank you. Good night. We will see tomorrow evening.